Hello and welcome back to another video. In today's video I'm going to be sharing with you my outlook on the dollar index, 10-year US government bonds, Euro USD and GU. I'm also going to be reviewing the economic calendar. First things first, let's actually take a look at the way market participants actually chosen to trade, some of our previous weeks of price action. So as you can actually see, we've had this range of consolidation prior to this push to the upside. Now, what was this range of consolidation? This was just, a range actually engineering, liquidity in, both sides of the market. Now, from here, we've got this push to the upside into premium of this array. Now, when we actually start to see, lower prices from here, we can actually confirm them. This is our manipulation, especially when aligned, with some of our high probable liquidity parameters, such as our daily fair value gap here, especially while trading in the premium of this actual range of price. Now, as you can see, okay, we are actually yet to mitigate, the lows of this original consolidation and this low to the downside here, which happens to be our previous monthly low. So going into this trading week, before anything, before I actually start, going into some refinements, my anticipated drawn liquidity for the weekly candle as a whole is going to be this low here, which is our previous monthly low. So moving on to, reviewing the economic calendar now, you can see on Sunday we actually have our Fed Chair Powell, speech, meaning more likely than not, going into the Monday where we actually have our bank holiday, we are going to see quite a significant new weekly opening gap in, a given direction of the market. Okay, now what I'm actually anticipating is, some sort of, this original consolidations leg to actually be mitigated on the Monday, or from obviously the new weekly opening gap, potentially late Tuesday, to actually be swept. Now, from this point here, okay, all I'll be anticipating in the latter half of Monday is just consolidating prices, engineering our sell side liquidity in the favoured direction of where the week candle's likely going to expand to, which is our previous monthly low. Now, from here, what I'll actually be anticipating is, higher prices. I want to see swift prices to the upside while still keeping our sell side liquidity actually intact, our internal range liquidity. Now, from here, okay, what I'll actually be waiting for is clear displacement to the downside in the anticipated direction where I'm actually anticipating the candle to expand to. Okay, so it could be Tuesday. You can see on Wednesday we've actually got, some of our new drivers play, such as our FOMC meeting minutes. So potentially it could be the latter half of Wednesday, where we see this push to the upside, and then potentially we get our displacement. Now, when we get our displacement, I want to see whichever, higher time frame parameter which caused this push to the upside be disrespected, straight away. So I want to see the push up here, then I want to see a big push to the upside there, taking out, some of our internal range liquidity, and obviously mitigating, our, 50% of this actual range here. And then I want to see, the displacement here. Candle, disrespecting some of our liquidity parameters. Now, from this point, okay, here, and obviously where, our parameters has actually been disrespected, this is where I'll be anticipating this retracement back up. Okay, now this is where, I'll be looking to actually execute the position. I personally myself actually wait to market execute, so when we get this retracement, I may potentially wait for, a significant 15-minute candle close, and then potentially market execute somewhere like here, stop loss above the high with the anticipated high of the week here. So I'm anticipating high of the week to be in somewhere from this range, could end up taking the buy side liquidity here, but it will still act as our manipulation. So, but, keeping the framework clear, all I'm anticipating going into again is this consolidation, keeping our sell side liquidity intact as mentioned, so we can actually get in line with a, higher probable, expansion to the lows, and then get that manipulation to the upside, and then look to take advantage of the expansion to the downside, heading towards this previous monthly low. Now, taking a quick look as well straight away at Euro USD, the way we've actually chosen to trade historically, you can see in our previous week here. This is where we actually mitigated this fair value gap. Now from here we have shown clear intent to push prices higher. You know, the first indication of this was actually the disrespect of this 4-hour fair value gap here. You can see how market participants have chosen to consolidate price within this, you know, parameter here. We get this clear manipulation within the parameter again, and then we get that displacement to the upside, you know, and then from here, obviously choosing to trade off this 4-hour fair value gap, making a clear push up, you know, engineering our liquidity instead of actually, you know, mitigating it as a weekly candle perspective from our previous week, meaning more likely than not, you know, there's 5 days remaining of this month, we are going to see higher prices. You know, you can see quite clearly the way the monthly candle is actually poised, and as of now, yes, it is predictable. So if we do start to see lower prices, me personally, I'm not going to be entertaining it at all, unless it's a very clear, you know, manipulation to the downside intraday trade that I can pick up upon with great confidence. So going on to, you know, the technical a little bit more as well, you can see the way we actually chose to trade on our Thursday and Friday. You know, we've had this push up to the upside, retracement into our OTE, and then we've shown intent to push prices higher from some of our intraday parameters here, such as our 4-hour fair value gap here, you know, in our discount of this range. And then this is where, okay, we can anticipate more likely than not we are going to see some of these extensions being reached, which align very, very nicely with our previous monthly high, and obviously the way DXY's framework has actually presented itself. Now moving on to GU, which could be the more favoured pair for this week, and I'll get on to that in a little bit. See the way we've chosen to trade in our previous week from the previous. See, you know, traded into this week's fair value gap. You know, we've shown very clear intent to price it higher. You know, 1, 2, 3, 4, 5 consecutive bullish candles to the upside. You know, zooming in on the 4-hour a little bit here, you can just show it can be seen, you know, easily how market participants have actually chosen to trade prices. You know, super bullish, meaning more likely than not, with the 5 days remaining of this monthly candle, we could potentially make a run for these highs here. You know, some of our external range liquidity. You know, what's to mention as well though, we have actually swept, you know, this significant high here, our previous yearly high, meaning more likely than not, okay, what I'm actually anticipating is, you know, quite a strong manipulation to the downside, you know, balancing and restoring equilibrium within the markets, you can see. And as mentioned on the Monday, we actually have our bank holiday, meaning more likely than not, you know, not going to purge all the way down to our discount of this huge push up. So more likely than not, okay, we're going to make a low, which aligns nicely with daily fair value gap here, which, you know, this is from there, I'll be anticipating that manipulation into the daily fair value gap, and then potentially see a push up towards the highs, you know, continuing that monthly candle's direction in the way it's actually poised. You know, this is the reason why I'm actually favouring, you know, G longs as of now. Obviously it will change on the day, but you can see in our previous week, you can see the way we've actually chosen to trade in this weekly fair value gap here, and then we've had that, you know, AMD framework within. You know, we've had that consolidation, manipulation to the upside, expansion to the lows, meaning more likely than not going this week, a run for these lows could be very favourable and probabilistic. Quickly, before the video ends as well, I'll just update on how I'm actually anticipating our 10-year US bonds to actually trade. So as you can see, okay, we were making a run for these equal highs in price here. However, you know, with our release of the news on our Friday, you can see the way market participants actually reacted to this data release, you know, disrespecting the 4-hour fair value gap, meaning more likely than not, okay, we could see some sort of retracement back into this, you know, inversion in price action, then, you know, make lower prices, you know, potentially targeting some of these lows before then we start to see a move up in some of our latter months. However, you know, this move to the lows will align very, very nicely with the dollar index. So thank you very much if you did make it this far, and I will obviously keep the Telegram updated as we go on into the trading week.